Welcome to the DR Weekly Wrap, your front row seat to the drama, data, and design behind the world's wildest brand moves. This week, Google's market cap tanks after ChatGPT Atlas drops a digital bomb. Victoria's Secret goes political. Toyota aims for Rolls-Royce. Apple buys Formula One. And Warner Brothers turns down $60 billion like it's pocket change. I'm Kia, and today we're breaking down how the world's biggest brands are either redefining strategy or completely losing the plot. Let's start with a shockwave. Google lost $150 billion in market value this week, all thanks to OpenAI's new release, ChatGPT Atlas. Atlas is being called the productivity OS for everything, a suite that seamlessly integrates AI into emails, docs, and workflows. Basically, the Google Workspace killer. The result? Investors freaked within hours of the announcement. Alphabet stock dropped nearly 10%. But this isn't just about a market reaction, it's a brand reaction. For 2 decades, Google has been the synonym for innovation. Search wasn't just a product, it was power. But AI has flipped the script. OpenAI, a younger, more agile brand, now owns the narrative of progress. And when perception shifts faster than your roadmap, even $150 billion can evaporate overnight. In B2B terms, this is a masterclass in brand momentum. You don't have to be bigger to win, you have to be believed in. Atlas didn't just launch software, it launched belief. And in branding, belief scales faster than market share. Meanwhile, Apple, the brand of flawlessness, found itself blushing for real. Users aboard the new silver iPhone 17 started posting that their devices were literally turning pink. Apple's response? Aesthetic oxidation. Translation, your phone's got brand embarrassment. Now, Apple can survive a color mishap, but the damage isn't physical, it's psychological. Apple sells control, precision, perfection. The idea that every detail is engineered by design gods in a white room. So when your silver turns salmon, that illusion cracks. In luxury branding, imperfection is inflation. Even a micro flaw can erode macro trust. The fix isn't new paint, it's reinforcing the emotional contract that Apple equals immaculate, because premium is perception. And perception doesn't tolerate pink. Nike and Adidas, 2 of the fastest brands on earth, just got tripped up by their own technology. Reports show both lost millions this week as their e-commerce pages lag during new product drops. And let's be honest, a loading spinner is the new out-of-stock sign. This isn't a technical glitch, it's a brand contradiction. Nike sells performance, Adidas sells momentum. But when your checkout freezes, you're signaling friction. Consumers don't separate tech from identity anymore. The digital experience is the brand. Speed is strategy. Website performance isn't it. It's branding. Because in 2025, attention isn't something you earn, it's something you don't waste. Marvel dropped a new logo this week. Flatter, more corporate, and supposedly more modern. Fans? Furious. They called it soulless, generic, and said it looks like Marvel, but made by LinkedIn. Here's the real issue. Marvel isn't a design system, it's a memory system. The old Chrome logo wasn't just shiny, it triggered nostalgia. When a brand with emotional capital redesigns without a clear narrative, it risks losing its anchor. Marvel wanted to evolve, but in branding, evolution without empathy looks like ego. Rebranding icons requires balance between familiarity and future. Change the visual, yes, but preserve the emotional code. Marvel's move shows that visual refreshes are easy, brand recalibration is not. Victoria's Secret doubled down on its inclusivity campaign this week, spotlighting authenticity over fantasy. Predictably, some critics accuse the brand of going woke, but the numbers tell a different story. Slight dip in short-term sales, huge surge in positive brand sentiment, up over 40%. That's not controversy, that's transformation. Victoria's Secret is doing what few legacy brands dare, breaking its own mythology. It's not about lingerie anymore, it's about belonging. Modern branding isn't about perfection, it's about permission. Permission for consumers to see themselves in your story. And when done right, that story becomes the new currency of trust. Toyota unveiled an ultra-luxury concept aimed at Rolls-Royce this week, complete with AI chauffeurs and hand-stitched interiors. It's beautiful, it's bold, it's a little off-brand. Because Toyota's equity isn't built on aspiration, it's built on assurance. You buy Toyota because you trust it, not because you dream about it. The risk? Stretching your brand too far up the pyramid, the opportunity, creating a halo of innovation that lifts everything below it. Upmarket moves work when they elevate your brand's essence, not abandon it. Toyota must translate its reliability into refined reliability, luxury with logic. And Apple's not done dominating. The tech titan just bought global broadcasting rights for Formula One. Yes, the entire sport. This isn't just entertainment, it's Apple turning motion into ecosystem. With F1, Apple gains access to live adrenaline, global storytelling, and cross-device engagement all in one brand move. It's no longer a tech company, it's a lifestyle monopoly. The next brand frontier isn't product innovation, it's experience ownership. Apple doesn't compete for attention, it curates existence. And in Hollywood news, Warner Brothers just turned down a $60 billion acquisition offer, stunning investors and sparking debate. Was it brand pride, strategic foresight, or just pure ego? Executives reportedly believe Warner Brothers entertainment IP from DC to HBO is undervalued in the streaming landscape. And honestly, they might be right. The move signals that in today's content wars, legacy media still believes brand heritage can beat cash offers. But here's the risk. Legacy pride can blind modern strategy. Turning down $60 billion only makes sense if you can prove your IP still commands attention currency. Refusing acquisition isn't arrogance if it's anchored in belief. But in branding, belief without execution is just ego with better PR. So what did this week teach us? That even the biggest brands, from Google to Apple to Warner Brothers, are learning that identity isn't fixed. It's fluid. Markets change, culture shifts, perception moves faster than stock prices. But the winners are the ones who can adapt without losing their core, who can change direction without losing meaning. Because in branding, power doesn't come from being untouchable, it comes from staying unforgettable. Thanks for watching DR Weekly Wrap. I'm Kia. And if you like this, make sure to like this video and subscribe for more weekly wrap-ups just like this.